This will not end well for most retail investors. This will be the topic of this video. I want to use this video to have a warning, to tell you a warning about the stock market right now. As you are probably aware, the markets are reaching all-time highs. The market is very expensive right now. The S&P 500, Nasdaq, Dow Jones, everything seems expensive. And you have much more speculation right now that we had at the beginning of the year. Since a few months, I would say, for a few months, since April, stocks have only gone up. And you have this meme stock category that is going to the moon. And a lot of people on YouTube or on Twitter are euphoric, sharing their gains, plus 100% gains in 1 year because they use leverage. They like to speculate about bad companies, unprofitable business models, and they are very happy because the stocks are going up. And they judge their talent for stock picking based on a 6-month stock price growth. Okay, you judge your talent because of a chart for 2 months. I see this phenomenon happen much more than in the past. So I want to make this video to give you a warning, and maybe you will be tempted to join the party. Please don't fail and don't force yourself to have a FOMO, the fear of missing out. So I have a couple of advice for you in this video as a clear reminder to only invest in good stocks that will compound for the long term. You don't need to chase after the hype to outperform the market. So I will use this platform to have a clear reminder for you guys. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. So I have lived through 2021. I was here at the time of GameStop, AMC. I was here when everybody was cheering and very happy because stocks only went up in 2021. And now we are exactly in the same category. Well, in 2021, everything went up. Meme stocks went up. GameStop, AMC, Nikola. You had plenty. BlackBerry, Virgin Galactics, plenty of SPAC memes that become suddenly good to invest in. Stocks only went up, so it was easy. And at the time, I saw people on Twitter, on YouTube, on TikTok saying, I am quitting my job. The stock market thing is too easy. Trading is too easy. Let me do something with call options, put options, covered calls, because seems like I can make 5% per week in the stock market. So I'm quitting my job. And it was in 2021, it completely destroyed their performance because just after this, it was a clear sign of a bubble, guys. Just after this, you had 2022 and they got out of this market very quickly because they used leverage and they expected 5%, 10% returns, not annually, weekly. So completely crazy understanding of the stock market. These are not serious people and they got washed out of this market very easily. This is why we survive and this is why they don't survive. In 2022, where they had to work again at a normal job and all their savings evaporated. Guess what? I'm seeing the same signs again. I'm seeing the same videos once again. People have already forgotten. Even right now, you can draw. I was watching the Joseph Carlson show, and he mentioned this video of a lady saying, "Yeah, I am expecting a 5 to 8% weekly returns. This is so easy." So yeah, I'm seeing other videos actually, watching other videos saying, "I'm quitting my job. Stock market is too easy. Retirement is too easy. If I can make 50% per year for the next 10 years, look how much of a millionaire I will be in the future." These are not serious people. Please don't compare yourself to these people because we are talking about people that have no clue how the stock market works. Over the past 50 years, the stock market has averaged 10% per year. And these people have a brain like you and I. And they think they can make 10%, not per year, but per week. So yeah, they are not stupid. They are They just lack the information necessary to make informed decisions, and they will pay the price for this. They will pay the price of the lesson of getting completely washed out and having a 70% drawdown in 2022. Okay, so when things will turn, maybe not now, maybe not next year, but eventually things will turn. We are living in a world with cycles, right? Up and down. When things will be down, they will be greedy, they will continue to be euphoric, and they will cry because the stock market will go down eventually. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. So, speculative mania is back. Low quality basket of shitcoins is outperforming everything. Maybe you have seen this chart of stocks of companies that produce no revenue, no earnings, and no cash flows, very recent, but it looks enticing to some kind of investors. And people are willingly putting their hard-earned money into these speculative assets. These guys are not investors. They are pure speculators. And most of the time, these are young people that are greedy and want to have some fun. You have this horrible quote of saying, playing the market. Well, you have new active members of these markets that are playing the market. You have quantum computing stocks with no proven tech that are up massively. You have plenty of unprofitable companies burning cash with the business model that is not proven at all. The stock is going up, so people are happy. I mean, how simplistic is it, right? Even unproven nuclear reactor startups are treated like sure bets. People are putting a lot of their portfolio to work with these shitcoins. And because the stock has doubled in 2025, they think they are smart. They think they are right. So they will continue. Now you may be wondering, maybe they are not so... maybe they are pretty smart, not so dumb. Because these guys know what they are doing. They invest in shitcoins, they make a double, and then they sell and they play safe. We've seen this scenario again and again. We've seen this scenario in 2021, and greed is a very bad thing to have. People said exactly the same thing in 2021. Yeah, I will have a double and then I will stop. And then you know what? You want to double again. To double again, you can become addicted. Greed is here. And because everybody compares their portfolio, their performance with everybody else, you compare yourself with your neighbor that is more stupid than you, that is doing plus 200% this year. Okay, taking more leverage, and it's more and more and more until the market turns and they got destroyed. Okay, please don't mix up with this kind of people. Social media is fueling delusion. On X, on Twitter, people post triple-digit returns and think it's normal or repeatable. Maybe you are on Twitter and also on YouTube. And I don't know for you guys, but a good percentage of my feed is now people cheering up, celebrating a portfolio that is up plus 150% in 1 year. And they say, it's easy, guys. Easy to do it. You just invest in... Open, you just invest in Robinhood, Palantir, very easy. Fair enough, stock market is so easy, I'm a genius. And they think they can do it every year. They think they can do it for a sustained period of time. Well, you look at history, exactly the same, these people did exactly the same thing in 2021. Exactly the same thing. Others brag about quitting their jobs to trade full-time because it's easy. How red do you want the flag to be? It's a huge warning sign for everybody involved in this market, especially in these pockets. Maybe for Visa and MasterCard, this kind of shareholder base, it's not that big of a deal. But for speculative areas, tech-driven areas, AI-driven areas, you mix up the shareholder base, and this is the ones you are working with. So yeah, maybe for some areas, the stock will get destroyed. You have very, very bad euphoria around specific industries. Now we are in a market where valuations are stretched everywhere. The S&P 500 is up 15% year to date, and investors want more. Well, in 2024, we were already up 20%. In 2023, we were already up 20%. Back to back to back, people want 20%. People want 30%. People want more than this because AI will change the world, because America is back. Well, just see how sentiment is changing. A couple of months ago, people were crying and saying that the US administration will completely destroy America's exceptionalism. Companies will die. All the tariffs issue will completely collapse. All the trade disputes that will crush the economy. We will expect a recession. Everybody was crying here. And it was not even 1 year ago. It was 6 months ago. So completely crazy to have this kind of momentum. As always, prices drive narratives. As always. If stocks go down, people cry. If stocks go up, they celebrate. It's always like this. And smart people took advantage of this opportunity last April to buy good stocks cheap. And now maybe they will take the opportunity to either hold or sell, because there are some specific stocks that are expensive right now. Speculative areas of this market, talking about materials companies that are very expensive right now. A lot of speculation, and you want to take advantage of this volatility. This is not the first scenario I'm looking at right now, because I've done the same thing for TPL a couple of months ago. For TPL, you had the same kind of behavior at the end of 2024. Look how parabolic the growth was up to November 2024. And I made a video at the time, full transparency with you guys. I made a video like, I'm selling. I'm a strong believer in the business model. Texas Pacific Land, they own lands in Texas. But at this price, you have a PE ratio of 70, 80. I'm out. You have too much speculation, too much euphoria. And I remember I received comments saying, you don't understand the valuation. Now we are talking about a major premium company. You have to value the company by the amount of lands they have, not because of the earnings they have. Fair enough. Since then, let's see who is right here. But I'm very happy I sold at the top. Absolute top, actually. Okay? So valuations matter. People will always try to invent new ways of valuing companies. Yeah, it's not because of this, because of this. This is exactly how the dot-com bubble was created. For those who remember, for those who are watching my video and old enough to be to have survived the dot-com bubble, people were mentioning the price to eyeballs at the time. So you just see if you have a lot of traffic on your site, on your website, and if you have a lot of traffic, it's as if you had sales. And then you value company because of a funny metric. It doesn't work like this, guys. At the end of the day, the stock market rewards companies that are profitable and growing. If you're not profitable, if you're not growing, it's a fad, it's a fake. You want to avoid these investments, okay? So people are greedy. People want the stock market to only go up. People don't expect a correction anymore. They don't expect a drawdown anymore. They say the music is getting louder and louder and people want to dance. They're chasing riskier trades with leverage, ignoring how expensive everything already is. It's exactly the same mindset as 2021. Greed disguised as confidence. People are saying this time is different, and every time they say it, it was not. So now it's because of AI. AI will improve efficiency, so margins will go up. Yeah, exactly. And in 2021, this one was already different because the world shut down. The world became digital. People were working from home. So you had huge efficiency gains. So in 2021, this time was also different. Guess what? It doesn't matter. You're expensive. That's the end. Now people invest in AI, robotics, autonomous cars. This time is different. It's not actually. You have good reasons every time to be bullish, but at some point you will pay a good price for your lesson. Or buying with a high valuation is a very simple mistake, but a lot of people do it actually. A lot of people make this stupid mistake. They look at a company, they are being seduced by an investment thesis, and they pay up. And it's not as if they played around with 5% of their portfolio. No, it's the whole portfolio with expensive stocks. And I see a lot of profiles like this on X. I won't name names, but a lot of people that are taking a lot of risks right now. Exactly the same thing we've seen in 2021. So now it's AI. AI will change everything, but the stock is doing 300% that aren't AI leaders. They are small caps with unproven business models. A lot of companies, small caps, mid caps, they are promotional about their AI advancement, okay? They are promotional about their AI future. And boom, the stock is up 30%. At the same time, you have the circular economy with NVIDIA, OpenAI, AMD, and everybody is pumping 20%, Oracle pumping 20%, 30%. You want to be part of the story, CoreWave, Nebius, all these things. I'm not saying these are bad businesses. I'm saying be careful to put 100% of your portfolio on this. I follow a bunch of YouTubers actually that are following this trend, taking advantage of Nebius, for example, or CoreWave, but it's not 100% of their portfolio that is like this. They are also invested in other companies that are safer, right? But on Twitter, with a lot of leverage, you have these kind of people. You would be very surprised to see their portfolio. It's very risky and a huge bubbly sign to see these kind of portfolios. We've seen this exactly 4 years ago. That's not innovation, that's speculation. And people are very proud to have the stock price going up, so they take on more risk. They brag, and I would say the main message for you, for my audience of serious investors, is to be cautious. I want to make this video just because I understand you can feel FOMO. Why not me? Why am I only making 10% per year? Only 15% per year? Please don't compare yourself to other people. You don't have the same risk appetite. You don't have the same age. Maybe you have children. Maybe these young guys making 300% per year, they don't have children. They don't have the same risk appetite. They can lose it all. And we are talking about percentage terms. Maybe they are just playing around with $5,000, only $10,000. So it's not the same as you. The average age for my YouTube channel is 45, 50 years old, okay? So I assume you have much more than $5,000, $10,000 invested in stocks. This is not the same risk appetite. They are very far from retirement. They can afford to lose it all and build the reputation and build the wealth again through their job. Maybe you don't have the time to do this. So this is not the same. Please don't compare your performance and your portfolio and your risk tolerance to these people. This is not the same at all. Everyone is different. Just focus on your objectives, your risk tolerance, your portfolio allocation, your risk management, only picking great stocks, quality companies with a reasonable valuation, and you make your 15% per year. You are very happy with your performance. Depending, maybe you want 12% per year, you can do 12% per year. Maybe you want 20% per year, you can do 20% per year. Maybe you want less returns, like 7 or 8% per year, but you want safety. In case there is a crash, you will be safe. I have a client like this. He doesn't chase after great returns, but in case there is a crash, you have hedges everywhere. So this is safe. Because he's just retiring just now. So he wants to play safe. Not everybody has the same risk appetite. When everybody believes that high returns are guaranteed, risk is highest. Hedge your exposure, take profits, and remember, trees don't grow to the sky. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. click the first link in the description to get more information. You will get a video, a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.